So I always try to remember that where, if you want to be confident, it's not like you're always gonna be confident. You have to take on these challenges, push yourself, do scary things. That gives you confidence to go to the next level and do something even scarier. And you just keep stepping up from there.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello, and how's it going? Welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate. We keep these podcasts fun and full of value. Thank you so much for tuning in today. Looking forward to an amazing conversation with our guest, who I've personally known since 2019 and invested in one of his team's very first deals, where I nearly tripled my money in only 26 months, earning an IRR, or internal rate of return, of 62%. It is my pleasure to introduce Zach Haptonstall, the CEO and co-founder of Rise48 Equity and Rise48 Communities. Rise48 has completed over 1.8 billion in total transactions and purchased over 7,000 units since 2019, with 1.4 billion of assets under management in Phoenix and Dallas, and still growing. Zach, buddy, thank you so much for tuning in, or for joining me today.
Yeah, no, thanks so much, Travis. Thanks for having me on the show, man. And yeah, if it wasn't for you, Travis, you invested in our first syndication. I was just trying to bootstrap that thing together, and thank God you came in and believed in us. Otherwise, we may not have closed it. So appreciate it, man, and happy to be here.
No, dude, I can't thank you enough, actually. Just, great returns. You guys have a great company. Can you tell us, our audience, a little bit more about yourself and your real estate focus?
Yeah, 100%. Yeah, so we just do exclusively, value add multifamily. We don't do anything else. We're just focused in Phoenix. Now, we recently expanded to Dallas. And a little bit of background on me, I was born and raised in Phoenix, just grew up in like a lower, middle-class family, knew nothing about real estate, no connections, no family money. And, probably like a lot of people, went to school, got a degree. I had a good W-2 paying job, but just, wasn't satisfied. And so January 2018, I resigned. I lived off of savings for over a year to figure out how to create passive income. And I was looking at a lot of different real estate classes, probably like a lot of different people, flipping homes, mobile home parks, self-storage. And I finally settled in. I said, I want to do multifamily and I want to do syndication, where I raise money from other investors, leverage my time and energy to grow their money passively for them. And so, it took 14 months to buy the first deal, Travis, since we started. And that was like a long grind. And then we started getting some traction. We're able to start syndicating deals, sell deals, and then started to really kind of snowball the momentum to now where we have, our own vertically integrated property management company. We have our own construction management company. We have over, 200 plus full-time W-2 employees on full benefits. So we've been really blessed and fortunate to kind of scale, but, I didn't come from that background. And so it's kind of, just, continue to grow, reinvest everything and build the infrastructure is what we've been trying to do.
Just wow, man. I mean, so short of amount of time, like it's like so true that we underestimate what we can do in like 5 years. Like from the time I've met you, and I remember going and looking at a 36 unit complex you guys had over by GCU, yep, to where you guys are now is just, it's phenomenal, the growth, and really speaks a lot to your grind and grit and determination and all that you've been able to do in just a short amount of time. So wow, that's all I got to say.
Yeah, no, thanks, Travis. Appreciate it, man.
So we do always start these podcasts off with some motivation, Zach. I don't know what more motivation could be than the story you just kind of shared, but what is a motivational quote you'd like to share with us?
Yeah, no, so there's a quote. So I remember this like in high school. I put this like as my, my corny graduation high school yearbook quote, but the quote is that you have to earn confidence, and it's from Lance Armstrong. This is before Lance got busted with his whole doping thing. Okay, so but I really liked, because I used to read his books a lot back then, and he would talk about how he had no confidence, things like that, and how you have to go through adversity, push your comfort zone, and get through the grind, and that's the only way to achieve things. And when you do achieve them, you earn confidence, right? And confidence, confidence can expire, right? It's like you constantly, it's like going to the gym, right? It's like you have to stay in the gym, constantly working out your muscles if you want to, stay strong, stay fit. And it's the same thing for your mind, and your spirit. You have to constantly be challenging yourself if you want to maintain confidence and take on bigger challenges. So I always try to remember that, where, if you want to be confident, it's not like you're always gonna be confident. You have to take on these challenges, push yourself, do scary things. That gives you confidence to go to the next level and do something even scarier. And you just keep stepping up from there.
Yeah, I love it. Really great quote. And I love Lance Armstrong, even with all the doping stuff that ultimately happened. I was the same. I read some of his books. But when you talk about adversity, I think so many people could see how quickly you rose and Rise48 rose. But maybe share with our audience, maybe some of those early trials and tribulations that you had. Like you said, you quit your job. It took you so many months to be able to get that first deal, and then it snowballed. But what were some of those struggles that you endured early on?
Yeah, exactly. I mean, some people may look at our, how many deals we bought and think, oh, they must have institutional money, or Zach is like a trust fund baby or has family money or something. But it's not the case at all. I mean, I was making more money than both my parents combined by the time I was 23, in healthcare sales, doing well, making six figures. And so, I was, really trying to save my money. Well, I quit the job, and I had, almost 300K of savings. I had just relentlessly saved over the years, from following the Dave Ramsey plan and, getting a lot of bonuses, all that good stuff. And so, it took 14 months to buy the first deal. And that's all I was doing, Travis. I was laser focused on this. And that was an empty feeling. There's a lot of days where you wake up and you go from making fat paychecks every 2 weeks to now your money is just, burning up, and it goes so fast, right? And it's like every day, I've always been type A. Like I want to get up, I want to be productive, I want to make an impact, whether it's my job or my whatever team I'm a part of. I want to bring value. And when you wake up and you don't have a boss, you don't have a supervisor, you don't have structure, there's nobody to hold you accountable, and you realize nobody really cares whether you fail or not. Nobody cares. Everybody has their own job, their own thing, right? So it's like, what do I do today to kind of move the needle? And it's very difficult. And when you're trying to pursue this multifamily thing, it's very intimidating. And when you don't know anybody and you don't have equity sources, you don't have a lot of money, then it almost seems impossible. And it did seem impossible to me many days. And there was many days where I mentally and emotionally quit, because it's like, what am I doing? Like, this is stupid. But you just keep grinding it out. And as long as you stay focused on it, it's a matter of when, not if, as long as you don't quit. And so that was a lot. And then even after we bought the first deal, I had to put all my money in the first deal. I had 165K left. I put 160 into the first deal. So I needed more money to keep going. I sold my house and made 120K. The next week after I sold it, I wired 100K non-refundable into a portfolio, which one of them was the Oak Tree deal that you invested in. I was all in, on that deal. And I didn't make any money, Travis, for the first 2.5, 3 years. I was constantly in credit card debt, constantly trying to stay above water. September of 2019, after I, quote unquote, owned 35 million of real estate, I was dead broke and I had $12,000 of credit card debt. I had to go back and get a job. Okay, so I went back into healthcare, worked a full-time job for 18 months, did real estate at night. And so it was always a grind. It's not like you just buy an apartment, I'm rich, I'm financially free. All that money is going to the investors. And until you actually execute a plan, you sell the deal, give the investor all their money back, catch them up on their preferred return, that's when you start to make money as a general partner. So just like any entrepreneur or any business, there's a grind, there's adversity that you have to go through. And even, there's constantly adversity. There's different dynamics and challenges now that we're scaling a company. We've got, so many employees, and you've got different dynamics where people don't get along. You have to fire some people, they're not doing their job. You've got competitors that are talking crap about you constantly. So it's just, there's all kinds of stuff that comes in.
There's always something. Yeah. There's always another hurdle to climb or something to overcome. And thank you so much for sharing that. I just think so often people think that most successful people in these businesses, it's just like you said, they're from trust funds or just everything worked out perfectly for them. And I don't think enough people know your story. And I've been fortunate to know you a long time, and I knew that story and invested in one of your first deals. And it's it's really amazing. Like you said, you weren't making money, but you were managing multi-million-dollar, assets. And it wasn't until now you guys have done 11 full cycle deals. It's like now it's like all that fruit, that 1% a day has really finally all compounded, and now you're really seeing some of that hard work pay off, I'm sure.
That's exactly right. Yeah, it's exactly right. It's like you just got to keep grinding. You don't have tangible evidence that you're making progress, but you do what you think is right, and you just try to stay disciplined, and then it does pay off, just like with anything eventually.
I love it. I'm a little bit behind, but I'm gonna get there one of these days.
No, it's all good, man. It's a long journey for sure.
For sure. So transitioning into our main topic, Zach, how can you help our audience of real estate investors? What kind of, other than the advice and everything, I mean, how can Rise48 and Zach Haptonstall help our audience?
Yeah, I mean, I'm always happy to, give advice if I can. I think the biggest thing that you need to know when you're trying to get into real estate is you need to identify exactly what is it that you want to do, okay? Because when I try to get into it, you can get this shiny object syndrome, right, in real estate, because there's so many different paths you can go down. Like I was looking at flipping homes, and then I want to do mobile home parks, because I was discouraged because I looked at multifamily, it seemed too competitive and saturated. I said, I missed the boat, nothing makes sense, I can't compete with these guys. That's how I felt. I felt inferior. But I finally just laser focused and said, no, this is what I want to do. I don't care how competitive it is. So I identified I want to do multifamily. Then I identified syndication. Then I realized, okay, to do syndication, I need all these different pieces. I need to be able to underwrite deals, raise money, have property management, manage relationships. And so I had to identify what are my strengths in the business, what do I like to do, and what do I hate doing? What are my weaknesses, and how can I find somebody to partner with or somebody to work for me to fill my weaknesses in. And so you have to really self-reflect and be honest about your strengths and weaknesses and find your complementary pieces, because that will get you ahead, right? And I think just in the beginning, you have to identify what is it that you actually want to do, because a lot of people may think they want to be active. They realize you don't make any money for a long time and it's a ton of work. You may actually want to be passive, and that's okay. You know what I mean? So I think it's just you have to identify what is it that you want to do, and then realize, okay, what do I need to do to achieve that? And start taking those baby steps to get there, and it'll all start to come together.
And I always tell people that, I'm both active and passive investor. It's like people think, they hear mailbox money, and I own a couple of rentals and short-term rentals, and people think that's passive. And I'm like, no one that owns real estate thinks it's passive. And I was like, it was a big aha moment for myself when I invested in your deal. And like I said, like 26 months later, I'm like, wow, that was really easy. And I didn't do anything, and really almost paid, because of the cost segregation, nothing in taxes. I was like, I'm on to something. I'm going to continue to double and triple my money doing these syndications, and then really now trying to do some of my own smaller deals right now, but hopefully being able to do some bigger deals while still passively investing in some of your deals. I know we're in another deal together right now, 141 units in Phoenix area, but then also looking to be able to put more of my self-directed money into good syndications with yourself and other general partners and other deals. You mentioned you went around, mobile homes, different things, flipping homes. What specifically was it about value add multifamily real estate that really just said, this is it for me?
Yeah, good question, Travis. So I was looking at different things. Like when I was first, I was pretty dialed in on mobile home parks for like 3-4 solid months, right? I was like cold calling these mobile home park owners. I had put together like a little prospectus, and I met with a couple of physicians that I knew to show them mobile home parks. But what I was realizing, there's a couple things. One is that mobile home parks are harder to sell to investors than multifamily. They're just not as sexy. They're kind of run down. There's not as many of them, okay, as far as inventory. And when I got to the point where I quit the job, Travis, and I was going through all the adversity, I told myself when I was, and I didn't know I was going to do multifamily syndication, but I was searching what I wanted to do. I got to the point where I kind of got this chip on my shoulder where I was like, you know what, screw it. Whatever I'm going to do, I want it to be so big that it's totally worth it. I want to just be able to scale and become like a billionaire eventually. You know what I mean? And so when I was learning about all these things, I was like, wait a second. If I can raise money from other people, I have no ceiling, because I can earn sweat equity, and there's an unlimited amount of money out there, right? And there's an unlimited amount of multifamily for any one group to buy. And then I started learning about, okay, how can I force appreciation? And I realized that mobile home parks, they are going to have a ceiling on their rents, right? And it's a much lower ceiling. And apartments will have a ceiling as well, but you have the bulk of the demographic living in apartment buildings. The demographic lives in mobile home parks much smaller. Okay, so I was thinking about scaling. I was thinking about how can I sell this to investors, what's attractive, just the whole concept of increasing the value to get good returns. And then the tax benefits, in general, you can get, more depreciation from my perspective on these apartment buildings because it's, the real asset instead of, just like personal property, like these mobile home parks can be considered sometimes. So it was a combination of all those things. I was trying to think long term, like to build a big company, I want to stick to mobile homes or to apartment buildings. So it was a combination of those factors.
No, that's great. And then, I mean, when, you mentioned something like you thought you missed the boat in 2019, 2018, right? So has that boat sailed? Is it a Red Sea now? Would you advise someone to get into multifamily real estate investing right now or maybe wait?
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.